marketing to all my needs again. It's ATM, I gotta get it. Time to take a loss, yes, it costs, get this bread, yeah, you know I'm with it. I just move space, yeah, you know I got a counter, so you know I got a blue face. Ice on froze, drip, drop, I flow, no alias, I guess I'm on a new wave. Forces, blasted, flip your NAS, count so fast, I'm stacked, paid. I'ma just blast with that chairman rank, all the way through that forest space. I'ma dip. I see the place, yeah, I'ma rip. No FOMO here, don't forget. When the candles hit the line kiss, see I'ma enter off in this body and I'ma keep going. I'ma keep rising. Flipping accounts, so God got cash, I'ma be grinding. Throwing them beats up for that BTS, they got stopped out all over the face. This is the blue party and just started yet. Magic car about to catch a case, I'm just every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss. Gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Every boss gotta take a loss. Gotta take a loss.
Gotta take a loss. Every boss gotta take a loss. Yes. What's the word, family? What's the word? How are you guys feeling today, family? Every boss gotta take a loss. Hey. Gotta take a loss. Gotta take a loss. Grand rising. If you guys can hear me, family, drop a 3 in the chat one time for your boy. If you guys can hear me loud and clear, drop a 3 in the chat one time for your boy. Because we are live right now, family. We are absolutely live. And we are absolutely going to go ahead and analyze the markets to see what is going on in the markets today.
What you know about that 50-50? Signature trade.
Go ahead and drop those locations as well, family. Go ahead and drop those locations. Hey. Turn up.
Let me see you.
Turn up.
Fitty, bounce, fitty, bounce, fitty.
Y'all know about this trading music right here.
Fitty, let me see you. Fitty, bounce, fitty, bounce,
oh my God,
fitty,
dollars ramping.
I got that red, I got that yellow, got that blue. Got that gray, I got that aqua too. NFAs, EMAs, yeah they rule. Off the 50s, how my bankroll grew. Can't no one stop me when I play. AUD bout to rocket, I place a trade. They be losing and hating all in my face. Consistently beating the market, make it easy. Damn, y'all foot to the left, yeah, one time. Pick it up, drop it low, yeah. On the dog, we gotta bounce. That will blow your mind. Your friend is cute, this trade is fun. Move your foot to the left, yeah, one time. Pick it up, drop it low, yeah, on the drum. Watch it bounce, real tight up all that 50 line. Today the market make it better, give me mine. Fitty, bounce, fitty, bounce, fitty, bounce.
By the way, we're talking about the 50 moving average, by the way. 50 moving average.
Bounce, fitty, let me see you. Let me put you on game real quick. When the red and yellow split, listen, hope you get this. I won't say it again, I won't repeat it. Glosses got you heated. Count stay empty, depleted. M&W off the aqua, man, watch it kiss. Catch a D-Lo, if the shift you straight up miss. Ride it all the way to TP or an exit. All in blue squad, D-Lo, let's get it, yeah. Move your foot to the left, yeah, one time. Pick it up, drop it low, yeah. On the dog, we gotta bounce. That will blow your mind, your friend is cute. This trade is fun. Move your foot to the left, yeah, one time. Pick it up, drop it low, yeah, on the drum. Watch it bounce, real tight up all that 50 line. Today the market
For sure, shout out to that boy Tyrone. He got the Ultimate Traders playlist. This playlist will have you ready to turn up, family. I'm not even gonna lie to you, right? Yo, fitty, bounce, fitty. Damn, the markets went crazy overnight though, fam. Went crazy. Let's go with the dollar, man. Dollar been on a rampage. Who would have guessed it? I mean, I've been calling it. Just throwing that out there. Listen, man.
Off the 50s, how my bank roll grown.
Yeah.
Let me see you.
Fitty, bounce. Fitty, bounce. GJ on fire. Yeah. Where the indices at? Indices really ain't do much though. Everything else is moving. But indices, they're starting to fall a little bit. Fitty, bounce. All right, let me see what we got in the building today, family. What's up, George? My guy, George, what's going on, brother? I appreciate you for tuning in. Denzel with the 2K in the morning. I see you, Denzel, bro. What trades did you take that made you 2 bands early, bro? What trades did you take, Denzel, that got you up 2K, bro? And where was the signals at, my guy? Like, I'm trying to make 2K with you, bro. What's up? All right, I still got Oscar in the building. Oscar, what's good, my bro? How are you doing? Sam Dollars, 20 Pip Savage. What's good, my boy? How you doing? Good morning to you all, family. I see we got Jamie in the building. Melbourne, Australia in the house. We got the Cold Mitten State. Shouts to all my family out there in Michigan. What's good, Devin? We got Savage Land in the building. You know what's crazy, 20 Pip? I believe me and you are easily, you know, the president and the mayor of Savage Land, USA. I'm not even gonna lie, right? You could be the president, that's fine. I'll be the mayor. I'm cool with that. Right? We got Free Zone in the building. What's good, Free Zone? How you doing? I see a lot of these dudes having during London says, yeah, I'm seeing that, man. These dudes definitely did make a move during London for sure. I can send you a picture of the chair I took. No drawdown. The markets are so slow. No drawdown sniper. All right, Denzel, we are officially a part of No Drawdown Gang. Let's get it. All right, Chinchaka in the building. What's going on, Jose? Wally. My guy Wally, what's up, bro? We got Trinidad in the house. Cape Town, South Africa. What's up?
I travel the world with a baddie, now holding me back. Making unlimited funds from hundreds to ones. Don't matter, this work can be free. Fun in accounts, cause the crap I'm the cream. And I'm all in the function like dealer, I scream. Yeah, y'all ain't ready for the guap. Now I'm falling, sitting pretty, getting ready for the drop. Gotta click the blue button, cause the red getting hot.
I gotta play my banger real quick.
Seen a milli, I got motivated.
Yeah, we do have news. The main purpose of me being live right now, guys, is that we do have news in about 40 minutes, 46 minutes to be exact, that I'm very interested to see how the market reacts off of. And that is going to be our core PCE and our regular PCE price index, which is another gauge that the Federal Reserve loves to use, guys, for inflation, right? In fact, I believe it is actually the main gauge, right? The main tool that the Fed uses to actually measure inflation, right? They definitely take into account CPI. They take into account PPI. Oh, man, this is a banger. I took the trading from the team we got based on now we celebrate. In this song, family, so I'm a little biased, but hold on. So like I was saying, right? So, you know, the Fed itself, guys, right? They have 3 different tools that they utilize to pretty much read inflation, right? Core, they have CPI, PPI, which is like the more ones that we talk about a lot, but they also have PCE, core price index, which based off what I've been reading, it's a little bit more, it's a lot accurate of a way to measure inflation, right? Which is why, you know, the Federal Reserve utilizes it a lot when they're actually trying to see how inflation is going, right? But what I'm doing right now, fam, is just taking my quick little tour down the Twitter sphere, see if there's any major headlines that I might have missed. You know, I do this every single morning, guys, just so that I'm aware of any type of news that can affect any bias that we might have from a technical perspective. Let's see what we got here. Revised GDP figures for Q4 show the core PCE index. The Fed's preferred inflation gauge was firmer than previously estimated. It rose at 4.3% annualized rate, up from 3.9%. Core inflation was 4.8%. Initially reported 4.7%. Interesting. Let's see. There was a lot of talk yesterday for sure, guys, from the members of the Fed. So yeah, you know, again, I'm just going through the Twitter sphere real quick, seeing what we got. Let's see if Mr. Walter Bloomberg over here said anything this morning. Yellen, we have been clear with China that providing material support to Russia in invasion of sanctions would provoke, more war talk. Let's see. Get into the bag. Let's see what we got here. Dollar index up to fresh 7-week highs. Let's see, Ukraine assistance to be announced on Friday. All right, I don't really see nothing too crazy as of right now, family. Let me go ahead and check out Zero Hedge. Let's see what he's talking about over here. See if there's anything that might stand out to us that might influence our trades this morning. Inflation raises challenge for Fed to get real rates positive. All right, that's an interesting headline. Let's see what this article is about right here. Let's see what they talking about, family. The peak expected real Fed rate has risen but remains negative, while it remains considerably higher than peak real rates in the UK and Europe. The Fed minutes on Wednesday underscored the bank's intention to keep raising rates. Look at this, right? It's headlines like this, family. It's headlines like this that we have to be mindful of, right? The Fed minutes on Wednesday underscored the bank's intention to keep raising rates, family. If a central bank is hawkish, which means they are planning on raising rates, what is that going to do to our markets, family? Answer that in the chat if you know. Answer that in the chat if you know. Right? Because statements like this is the reason why I'm still very much hawkish as well, right? It's the reason why I'm still very much, leaning towards one side or the other, right? Why I'm so risk off still to this day. Okay. And then let's continue. It says, with the market's expectations of the peak Fed rate raising about 50 basis points since the beginning of February. However, this still has not been enough to take the peak real rates based off CPI to positive territory. Core PCE data just released for quarter 4, which was revised up to 4.3% from 3.9%, highlights the Fed's challenges, right? So there was PCE data, guys, that actually did come out yesterday, right? And that data that did come out yesterday, which again, we also have some more today, but that data that did come out yesterday, guys, it did come out higher, all right? Which shows that inflation is still, very much here. And it's still something that the Fed is going to absolutely try to tackle, right? It's things like that, guys, that we have to be very, very mindful of. But let me see if I can find it. Where was it? Because I know I've seen it on the calendar as well. I think it's a 1-star, actually. Let me go ahead and see. Let me see. Let me bring up my 1-stars. And I'm talking about in terms of the importance of news, family, when I'm talking about, 1-stars and things like that. Let me see, where was it? I had to go make some changes. Now I'm elevated. Get into the bag. Below outside. Let me see. Where is it? I'm on my getting it back. So I see. Oh, here it is. Yeah, so see, core PCE prices, guys, for last quarter, right? Last year's fourth quarter did go up. Okay, so this is why, again, the Fed is probably still going to remain the course of being hawkish. All right, but let's see what happens today. Because, again, we do have, core PCE pricing for today for this month, which is going to be interesting to see what this comes out as, right? This can, absolutely shake the markets, guys. And that's what I'm live here with you guys today to analyze the release and see what the market reacts and how it reacts to see if there's anything that we can potentially take advantage of for sure, right? All right, so that's very, very cool. Let's see what else we got here. CPI fixing swaps, see the real rate going positive in May. Okay, so in May, they should go positive based on implied rates from Fed funds futures. But this assumes the Fed is able to hike as much as the market expects, 55 basis points across the next 2 meetings. Yeah, so, I mean, this is definitely something we've been talking about, right? 25 basis points for the next couple releases. Let's see, while March is likely to see a 25 basis point rate. Rise in rates, enough could still happen in the economy before the following meeting that will cause the Fed not to hike in May. Okay, that's interesting, right? So if we do start to slow down, guys, interest rate hikes in May, see, then we have to start to potentially, change sentiment, at least for me, right? Because the moment that we stop raising interest rates, guys, is the moment that I'm going to go from being risk off to possibly being risk on. Right, for those guys that are newer to the chat, family, I appreciate you guys. I love y'all. Thank you guys for tuning in with me today. Hopefully, you guys are absolutely going to get some value today. But yeah, being, risk off pretty much just means, guys, that, there's a lot of fear, uncertainty, and down in the markets, right? Whenever you hear that there's risk off sentiment, that means that investors, traders are going towards the safe haven type assets, right? They're going towards, dollars, right? They're going ahead and they're starting to get heavy into dollar, right? They're going ahead and starting to buy, certain treasuries, right? These safer assets, these safer plays. Now, when we are risk on, it pretty much states what it is. Turn the risk on, right? Where now they're probably going to start to leave a lot of these safer assets, and what they're going to do is now go into more riskier plays, right? Which is considered like the equities markets, the stock markets, right? Even certain foreign currencies are also considered riskier, quote unquote, plays, right? So you'll see those type of plays, gain a lot of value, family. So this is going to be very interesting to see what happens in May. And honestly, I don't see no reason why they don't start to slow down in May, unless the data just comes out crazy these next couple meetings. But that's going to be interesting to see for sure, guys, to see what happens as well, right? But again, it's things like this that we have to be mindful of, family. If you guys are a trader that really wants to start to understand fundamental analysis, just start coming to Twitter. Use Twitter a lot, guys. Like, before I started getting into fundamentals, like, I hated Twitter, right? It just wasn't I'm not going to say I hate it, right? But it just wasn't a platform that I used at all. But now that I'm heavy into fundamentals, because I understand that that's what moves price, that's what smart money is making decisions off of, it's very important for me to be, aware of the headlines that are circling the space overall, right? Because those headlines that are circling the space, guys, are the things that are going to move price. Okay? Those are the things that are going to move price, all right? So that's what we got there. Nothing too crazy, though. We just got to be mindful that we do have this PCE, and then we'll analyze the market and see what's going on once we get there, right? So let's see what we got here now. Now I want to go ahead. I want to listen to this song real quick, guys. I'll answer any questions you guys have, family. Any pairs that you guys want analyzed one time, definitely go ahead and drop them in the chat. All right. Any questions, comments, or concerns? Any
You should see all their faces. I had to go make some changes.
Right. We'll see what happens. We'll see what happens, guys, as the news comes out for sure. Right. But let's see what else we got here in the chat. Shout out to all my Trinidadians in the building. I appreciate all my family out there in Trinidad. We got Cape Town, South Africa, Nairobi, Kenya in the building. We got Denmark, Uganda. We got Moldova in the building. What's going on, Mario? I'm VP. You got the hand on politics. We can do that, 20. Let's see. Seen the market was rejected on the 4-hour, executed on the 1-hour. Yeah, you're talking about EURUSD, right? You said you took a short at 1.6, 1.06. So you took a short right up here. Okay. Yeah, that's not bad. I mean, again, the market has been lower, right? We've been trending lower, so it's always a safer play, guys, to stick with the current trend than trying to predict a reversal, right? So that's an absolute banger of a catch for you, man. Shout out to you, Denzel. That's a good one right there. All right, let's see what else we got here. Made 150 pips on USD ZAR today. Took it because of gray listing. Okay, interesting. I still like to check in on you. You're one of the original YouTubers that taught me trading. That's love, man. I appreciate that. What are some good pages to follow on Twitter for news, right? So yeah, I'll show you guys the ones that I personally use, right? Because I only use a couple, but there's so many out there that you guys can use as a way to really understand what can happen, right? So I got Zero Hedge right here is one of them. Walter Bloomberg. These two are very, very, up to date with news, right? Like, they drop news like the minute it usually comes out, right? So those are usually my go-tos. But then we have Mr. Nicky T. We like to call Mr. Nicky Leaks. Right, and this guy right here, guys, is super, super powerful, by the way, because he actually is one of the editors over there at the Wall Street Journal, and everybody always calls him as the mouthpiece of the Federal Reserve, right? So whatever he says, he usually gets directly from the Fed, right? Which is very interesting, which is why he's super powerful. Daily FX Team Live is another good one, right? Obviously, for us Forex traders, this is more so just going to give us news that's going to impact our markets overall. And then there's a couple other ones, right? Like maybe Meet Kevin is another one that I like to follow, right? Just because he's super knowledgeable as well. All right, so there's a few out there. There's a ton more, though, right? There's a ton more that you guys can go ahead and follow to really be up to par with what's going on. All right, let me see. I'm going to change my mic real quick, family. I'm going to change my mic because I got a better mic anyways. Give me 1 second. Let me change my mic so you guys can hear me a lot better. Give me 1 second. This should improve the microphone by far. Give me 1 second. I'm gonna get this up.
All right, there we go. Now it should be. It's probably way too loud now. Hold on, let me fix this. All right, there we go. Let me know if the mic sounds better, family. How's the mic sound? Let me know if the mic sounds better. Mic sound good? Let me know if the mic sounds good, family. It should sound good because this mic is usually way better than the previous one. Let's see what else we got here. Bullish dollar, stocks down, exactly. Let's see what we got here. I'm trying to catch up with the chat. Y'all going crazy. High rates, less dates, they say. Stronger dollar, good one. Yeah, do think the dollar is hawkish today. What pages should we follow? Okay, we got UJ, EU, and AU. UJ, US oil. Can you look at GU? Yeah, I got y'all. Let's see. This is way better. Yeah, okay. Way better. All right, gotcha. I got you, family. All right, so let me go ahead and just respond to a little bit of these comments, family, and then we'll start going ahead and looking at what the market is doing overall. Let's see. Hit the likes one time for your boy. Yeah, family, please go ahead and smash the like button. Tyson, I appreciate you, my guy, for making that announcement. All right, because now I'm going to have to bring it up on a stream. Family, the goal for today is 100 likes. You guys know the goal is always 100 likes to start off. Right? Can we get 100 likes on the stream? We don't even have 100 viewers just yet, but let's get 100 likes. Right? If everybody can like the stream just once, I appreciate you guys so much. And you guys know it's over now. I got my wifey always come through. Wifey always come through with the it's that thing right here, man. Oh my goodness. Wow. Hey, yo, baby, they put their foot in this today. Yeah, they put their foot in. Oh, don't rub my back like that, woman. Chill, we on live. Wilding out.
You so extra.
Damn. Yeah, they put their foot in this one.
As soon as I walked in there, she was like, "Hi, Selma." She was like, "The usual." I was like, "Yeah." She's like, "Okay."
We might as well start buying stocks in freaking Starbucks at this point. I wonder if Starbucks pays out dividends. Now that I think about it, put some money in stocks, use those dividends to actually buy this damn coffee. Who else is addicted to coffee, family? I have a nasty addiction to these things. I'm not even gonna lie to y'all. All right. Have you ever shown a single live trade? Of course. I mean, I'm gonna be honest, that's a valid question though, especially on social media, on YouTube. That is a valid question, right? But yeah, of course. You know, we actually trade live every single morning with our premium community, right? With my premium community, we trade live every single morning. All right, but let's see what else we got here. Abel, my guy, KL, what's up? Seeing that the commitment of traders site data is lagged, is there any other sentimental sites that you go to? That's a great question, right? So the only other sentimental sites that I actually use, not really. COT reports is probably the only thing that I would consider from a website perspective. The only other things that I would use is actually hearing certain individuals speak, right? Actually listening to the Fed speak, right? Actually listen to, you know, what Jerome Powell's saying, right? Listening to what the president has to say, right? So that's like the only thing I would use personally, right? It's definitely going to be more so like actual high political figures speaking, all right? But COT report is probably like the only thing that I would really trust more than anything. Let's see. Mr. D-Lo Day, shout out to you. I get buckets. Them days were pretty lit, I'm not even gonna lie. Let's see. Smashed and hit it, liked. Almond milk. Now, I don't think that this is almond milk. This is just regular. I don't even know what this is. Regular milk in this thing, I believe. And I don't even drink regular milk anymore, to be honest with you. Right? Because I actually do. I love almond milk. I'm not even gonna lie, right? Like I haven't drank regular milk in a while unless they actually put it in this. Right? Besides that, yeah, I'm an almond milk kind of guy. I'm not even gonna lie. Not even gonna lie. Let's see, you might as well trade Starbucks. I'm telling you, we might have to. Pre-work addiction here. What's up, bro? It's your boy Pay 10 Piss. What's good, Pay 10 Piss? How you doing? We on demon types. We on demon time coming for all seller stuff. My guy Eric, man. It's only me and you, bro, against everybody else, bro. And I don't know if we go look at. I mean, I don't know, bro. We might be on the right side of things, bro. But I'm with you, bro. Shout out to that guy Eric, man. I love it. I love it. I love it, bro. I love it. I love it. I love it, bro. All right, so let's go ahead and take a quick look, family. We do have news in about 30 minutes. All right, keep that in mind. So let's go ahead and take a quick look at the overall market, see what the hell has happened. I'm gonna go by based on what your guys' recommendations are. So somebody did say UJ, so let's go take a quick look at UJ, and this thing is absolutely on fire. Wow. Yeah, the markets were moving crazy, family, for an Asian session. Like, Asian session was going, I mean, not Asian, London session was going insane. Look at this move from UJ. Right, 120 pips in a matter of 4 or 5 hours. Insane. Going nuts. I mean, at this point, family, like, there's obviously no trade that we could take right now, just because of what it's already done. But I'm still very much bullish to dollar. I mean, I've been a dollar bull, guys, since 2021. I've been a dollar bull, right? Even throughout this entire correction, right? Which is, this correction was warranted, right? This correction itself, guys, was expected, just because, you know, we did start to see inflation slow down. You know, we seen CPI data absolutely start to reverse. You know, CPI, guys, was at 9% at one point, right? Now it's at around 6%. So just the fact that we did start to see CPI turn around is probably influencing, or is what influenced a lot of this dollar weakness. But guess what? Now we're starting to see CPI slow down, right? If that makes sense, right? Because, I mean, we were seeing drastic drops in CPI, guys, over the past 3 readings. Now, hold on, let me turn down this music. I want to make sure you guys, I feel like I'm yelling. Hold on. That might just be me in general. Right, but now we're starting to see CPI still dropping, but now we're starting to miss projections, right? You know, because CPI was projected to come out a little bit lower, guys, in this most recent reading, and it didn't. Right? It came out lower, but it didn't hit the projections of how low it's supposed to go. Things like that is what's going to influence, guys, these currencies 100%. All right? So this was warranted. This was expected. But now, since CPI, or since inflation is still very high, right? Inflation is still very high. We're talking about, although, yeah, we were at 9% at one point, we're at 6% now. That's still very high, guys, right? CPI at 6% is not what the Fed wants. Like, yeah, it's a moment to celebrate because we did see this thing turn around a little bit, but that's not time to just jump up and down and be like, oh, man, the markets are going to fly again. No, right? We're still at 6% CPI, 6% inflation, which is still triple of what the Fed's goal is. The Fed's goal is 2%, family. We're 2%. We're at 6%. We still got 4% to drop. We still have 4% to go to get to where the Fed actually wants to be at. Right? And that means that the Fed is going to remain hawkish. Right? When we have a hawkish Fed, right? What does that mean? Right? When we have a hawkish Fed, what does that mean, family? Go ahead and answer this in the chat one time. What is that going to do for, let's just make it simple. What is that going to do for the dollar? When we have a hawkish Fed, what is that going to do for the US dollar? Man, I told you, I wake up super energetic as it is. But when I get one of these in my system, oh, man. I be having to take a nap after the call with so much energy I go through. Right, hawkish Fed leads to what, family? A hawkish Fed leads to what? Exactly. Exactly. Bullish dollar. Bullish dollar. Right? Hawkish Fed is going to lead to a bullish dollar because that means that they still have to tighten. They still have ways to go. Right? When you are in... Guys, do you guys know what interest rates really are? Do you guys know what interest rates really are? What are interest rates? Who knows the actual purpose of interest rates? There we go, 20 pip. See, 20 pip, man, you a savage, bro. No pun intended. But 20 pip, you a savage, bro. You a savage, bro. Yeah, guys, interest rate is the cost of money. It's the cost of borrowing money. Now, why does the Fed utilize interest rates as a way to manipulate monetary policy, we could say? Who knows the answer for that? Why does the Fed utilize interest rates as a way to manipulate monetary policy, to influence what they want to happen in the market? Who knows the question? Who knows the answer for that one? But we on fire right now. Interest rates is the cost of money, right? It's the cost of borrowing. The reason why we have interest rates is because when the Fed loans money to the banks, they are loaning money to the banks at a specific benchmark rate. So when interest rates increase, right? When interest rates increase, that is increasing from the Federal Reserve to these banks, to these institutions. And now because these institutions have to pay higher costs to borrow money, guess what else goes up? Our interest rates as consumers. Right? When the Fed raises interest rates, they're raising interest rates towards these banks and institutions. But what the banks and institutions have to do now to pretty much eat that cost is they have to raise interest rates on us. And when interest rates go up or the cost of borrowing money increases, does that kill demand or does that increase demand for certain, products that we want to buy, right? Consumer products that we purchase on a daily basis, right? Does interest rates increasing kill or does it help demand? Simple question. Does it increase or slow down demand when we raise interest rates? Remember, interest rates is the cost of money, which means we are paying more when interest rates go up. We are paying more when interest rates go up. So is it going to kill demand or is it going to support demand? Damn, yo, this thing is buzzing. Exactly. Right? The reason why the Fed utilizes interest rates, family, because it's a very easy way for them to kill demand. When interest rates go up, the demand for a lot of different products and services that we usually spend money on, it starts to slow down. Right? Interest rates going up dries up demand. Interest rates going up dries up demand but increases supply, which is what causes the price of various assets out there. Are you guys with me, family? Are you guys with me? Drop a 3 in the chat real quick one time. Right? Because if you just simply understand this concept right here of interest rates and how the Fed utilizes interest rates, there's no reason why you're not on the right side of the markets. There's no reason why you don't understand what's actually or what should be coming in the future. These markets have been so predictable because we understand what the Federal Reserve is doing. That's why for me, guys, it's so important to be understanding of fundamental analysis, because this is stuff that's going to influence what these prices are going to do. So as long as we continuously have a Fed that plans on continue to raise interest rates, demand is going to continuously decrease. As demand decreases, what is that going to do for the prices of assets? It's going to cause the prices to decrease as well. So why do you think the stock market, and we'll just look at the S&P 500 for example, right? Why do you think the stock market has been dropping? What do you guys think? Why do you guys think the stock market has been dropping? Why do you guys think gold has seen a very, very drop? I mean, we did rebound just a crazy rebound in gold, but also dropped. Why do you guys think the euro has been dropping like crazy? Why do you guys think NAS dropped? US 30 dropped, right? Like, these markets are so predictable when you understand this stuff. Because when there's no demand but a lot of supply, that forces the price to go down. That forces the value to decrease. And that's what we've been seeing. All because we have a hawkish Fed. Right, guys? The Federal Reserve has the most influence over the money markets than anything out there. Jerome Powell, who is the chairman of the Federal Reserve, has more influence over the money markets than our own president. Because he has the ability to, I like to say manipulate, because that's pretty much what they do. But he has the ability to manipulate monetary policy to sway the markets one way or another. And if we're able to just dissect what they're saying, and if we're able to be on the right side of what the Fed is doing, family, now our trades are going to be a lot better. Our ability to predict what's going to happen is going to be a lot better. I'm just being honest. Oh, man. That's funny. He has more power than I'm telling you. Jerome Powell 100% has more influence over the money markets than the president. And I'm only speaking about the money markets as a whole. Right? Equities, things like that, right? Everything else, the president obviously is the president. But over the money markets, Jerome Powell is that guy. Right? He's him. Right? Jerome Powell is Himothy. Jerome Powell is Himothy. Right? He's him. All right? Let's see. I don't want to sound dumb, but can you explain what no, that's actually, you're not going to sound dumb at all, because I'll be surprised if 90% of people on this call understand what monetary policy really is. All right? So don't feel like you're going to feel dumb. In fact, no question is ever a dumb question, family, right? Because everybody's at different levels of learning when it comes to, especially fundamentals, right? Because there's so much that you can learn. There's still so much that I can learn, right? I feel like I'm really knowledgeable now, just because over the past year and a half, 2 years, I really like put my head down and went all in with fundamentals. But there's so much still more that I could still learn as well. Right? So don't ever, please, don't ever stop yourself from asking a question, family, because you just don't know. In fact, you asking a question might also help that next person that's too shy or fearful of asking those questions. Okay? So don't ever stop, right? But monetary policy, family, I mean, we could actually bring up the actual definition, right? Because I could say what my definition is, but it's going to be very similar to with this. But I want you guys to get the actual definition, right? But monetary policy, in my terms, guys, is pretty much just what the Federal Reserve has access to, right? It's what allows them to actually go ahead and influence, these markets as a whole, right? But let's go ahead and look at what actual definition is, so you guys can see for your guys' self, right? Let's take a look at, this right here. Right, monetary policies are set of tools that a nation's central bank has available to promote sustainable economic growth by controlling the overall supply of money that is available to the nation's banks, its consumers, and its businesses. That is what monetary supply is. Or monetary policy, I mean. Right now, again, do not confuse, and I'm glad that this picture's here as well, right? Do not confuse monetary policy from fiscal policy, right? Monetary policy has to do with the central banks. Fiscal policy has to do with the governments. All right, because those are two words that you're going to be hearing. You'll hear those stuff often, right? Monetary policy has to do with the Fed. Fiscal policy has to do with the policies that the government implements. Now, policies that the government implements could influence monetary policy and vice versa, right? They can influence one another, but they are different. Okay? So keep that in mind. But yeah, that's what monetary policy is. That's actually a very, very good question, though, by the way, Joe. Let's see. Unless Trump is president, right? Yeah, but Trump, you know what's crazy? Like Trump, when he was in president, when was it? It was like, I want to see, when was it? When Trump was in office, he used to go back and forth with Jerome Powell, right? Because Jerome Powell was at one point in the process of raising interest rates. And what did Trump do? Right? Trump knows that interest rates going up is going to absolutely kill demand. And back then, the one talking point that Trump had was that the stock market was absolutely flying, right? When Trump was in office, the stock market was reaching new highs every other day. So when Jerome Powell said, man, we have to start to slow down, this is going too much, this is going too fast, we are now getting too inflated, and he actually started to raise interest rates, Trump called him up and actually threatened his job. The president doesn't even have power to threaten who's doing or who's in control over there at the Fed, right? But Trump literally called up Jerome Powell and was like, listen, if you keep on raising interest rates, you're going to be fired. Trump must have thought he was still on his talk show host, or that one show that he had, right? I think it was called The Apprentice, where he was always firing people. Trump thought he was still on The Apprentice over here threatening Jerome Powell, saying, man, you're fired if you keep on raising interest rates. But, to be honest, Jerome Powell did get scared. Like, Trump did put some fear in his heart because he did end up lowering rates again. He did end up lowering rates. So it was a crazy time back then, right? Back in, I think it was, I want to say 2018, 2017, 2018, 2019 is when this happened. But yeah, Trump does, obviously, he did put fear in his heart, which is kind of crazy. That is hilarious, man. That is hilarious. Right, but that is a good point, though, unless it's Trump. Let's see, those Trump tweets were something else. Yeah, Trump literally would used to shake the markets like crazy, man. We got, hold on. Give me 1 second, guys. 1 second. All right. Let's see. You ever had an allowance monetary policy? Is the Fed allowance for the government kind of rate? Let me see if I can reread that. You ever had an allowance monetary policy? Is the Fed allowance for the government kind of rate? Oh, okay, yeah. Now I understand the question. Yeah, it's very similar, right? Again, they do go kind of hand in hand, right? If the government wants, something to happen, then they might lean towards the Fed. If it's more so towards the monetary side of things, they'll try to have talks and conversations to try to see what they can do for sure. Let's see. Thank you. That was honestly very useful. Yeah, 100%, Joe. Family, I appreciate y'all, man. For, again, ask those questions, guys, right? One thing about me, man, and one thing that I'm probably known for, honestly, is the fact that I'm an educator, right? Like, that's probably what I'm known for anyways in this space, is that I actually educate, right? I actually really, really talk about this stuff that most traders ignore because they don't understand it. Like, I'm that fundamental trader, family, that actually uses fundamentals, right? Like, I don't just say, oh yeah, I use fundamental analysis. Like, no, I actually use fundamental analysis. I usually use sentimental analysis because that's what dictates all of my trades. Like, if you guys want to know, like, how I set up my opportunities, family, right? I don't ever take a trade without understanding what the fundamentals are, or at least what my interpretation are, right? So this is what I do first. First things first, when I come to the markets, I always look at the fundamentals first. This is the first thing that I do. I always check what the fundamentals are. And then the second thing I do is I create sentiment around it, where I try to figure out what the sentiment around the fundamentals are from the smart money concept type of thing, right? Smart money. What does smart money think? How does smart money feel about this fundamental analysis? And then I use technical analysis, guys, to find entries. All right, so fundamentals for, and this is just me personally, right? It doesn't have to be anybody else, but for me, I always check what the fundamentals are. Then I try to understand what the sentiment is based off the banks. What is the banks going to think about this news release? Right? And then I go ahead and I use technical analysis to find entries that will align with the fundamentals. I'm telling you, and this is different than what, most traders do. It is what it is, right? But this is what has helped me out tremendously. And what has absolutely taken my trading to the next level, right? Was following this process first. So if you guys ever come onto my live streams, I'm always going to analyze the data first. I'm always going to really break down the sentiment, and then we'll look at the markets and try to create some type of a sentiment around that stuff. Right? Does that make sense, family? Does this make sense? All right, because this is how I approach the market. I'm not saying you have to do it, but I will say this: for those of you guys that do approach the market in this manner, I can almost guarantee that your trading is going to absolutely tenfold. Your trading is going to increase, because now you're not just relying on certain patterns from a technical perspective, which all these patterns, guys, they only work to a certain extent. Okay? So, yeah, that's how I personally approach the market. Just for somebody that's newer to the call that might have just found me right now, just so you guys have a little bit of a context as to how I analyze the markets. Cool. All right, let's see what else we got here. Can you give us both scenarios before the PCE figures come out, King? Yeah, of course. So let's go and take a look at that. That's actually a great question, by the way, right? So we do have core PCE coming out in about 7 minutes, family. You know, as of right now, we'll look at the year over year. You know, the previous came out at 4.4. As of right now, it's expected, and this is for core PC. We do have regular PCE as well. All right, but 4.4% is what last came out. They're expecting this one to come out at 4.3%. If we do come out at projections, right? If we come out at 4.3% or higher, what do you guys think the market is going to do? I actually want to hear what you guys know. I love asking you guys questions, family. Like, I love educating, man. That's just my thing, right? But if we come out at 4.3% or higher, is that going to cause dollar strength, or is that going to cause dollar weakness? What do you guys think? Not sure Mr. Nova to go. They're just shortening it, but that should be Mr. Nova to go. Yeah. If 4.3% core PCE index comes out at 4.3% or higher, what is that going to do? Exactly. Right? Shout out to AJ. Right? Shout out to Isaiah. Shout out to Leah. Right? Shout out to Macau, Warren, 20 pip, of course, right? Free zone, of course. I already know you guys are going to answer it. Yeah, guys, if we come out hot, if these numbers come out hot, that is not good to fight inflation. That is not good. The Fed does not want to see this number increase. The Fed wants to see this number decrease, not increase. Right? So if this number does increase, that means traders and investors are probably going to go towards safe havens, aka US dollar, and government bonds and treasuries. Okay? If this number comes out lower than 4.3%, see, now the flip side is going to happen. If this number comes out lower, then we will probably see, from a macro perspective, dollar weakness, equity strength. Right? Because this is the thing I think a lot of traders get confused, family, right? This is something that I also used to confuse as well. Right? I would think that when there was positive data that came out, it would increase the dollar, and it'll also increase the stock market, where that's usually not how it works, right? And vice versa, right? Negative data come out, I would think that it will make the dollar drop in value and also make the stock market drop. That's not how it works, right? It's one or the other, guys, right? We're either investing into the dollar or we're investing into the stocks, right? And I'm just using stocks just to keep it very simple, right? We're investing into equities overall, right? So if this number comes out lower, we're probably going to want to go ahead and get into the equities. Why? Because inflation is trending down. We want this number to go down. So since the number came out lower than predicted, that is bringing a lot of optimism into the space. A lot of confidence, a lot of hope. When there's optimism, confidence, and hope in the markets, guys, equities increase. You'll see the stock market start to fly. You'll see indices start to fly. You'll see gold start to get a lot of value. You'll see a lot of these foreign currencies like the euro, the Aussie, the pound. You'll see those also start to increase. But whenever we see the flip side, if this number comes out higher than what's predicted, see, now everybody that was in the stocks, equities, everybody that was in gold, everybody that was in foreign currencies, they're probably going to want to get out of those things because we just got bad report, and they're going to go back to the safe haven. Family, is this making sense, man? Because this right here is some value. This right here is some, like, this concept. If you understand just this simple concept, family, I guarantee you your trading will absolutely explode. I guarantee it will explode. I guarantee it. But you have to really start doing your research, family. You got to understand how the markets are influenced through the news because of the data. Right, let's see what's up with the Michigan news sentiment. I'm not sure. There's a difference between a shocking numbers reaction and expected numbers. That is very true as well. Right, that is very true, right? Shocking is obviously going to shock, right? Exactly what it says. You're right about that for sure. Let's see, we got the young legend in the building. My guy Kyle, what's up? Let's see, Mark is literally like having a girl. The more you know about her, the better you're able to control yourself when you're having arguments. Man, this guy Eric is a savage, bro. That is so true. All right, that is so true. Let's see, Great Valley. I'm really sitting back and taking notes. I mean, listen, I'm not surprised, Evan, at all, bro. You know, you've always been one of the best students by far. Fundamentals are my biggest weakness, and that's the thing. Fundamentals is probably 99% of traders' biggest weakness because they don't take time to actually learn it. It's actually at first it seems very daunting. At first it seems very hard to understand, but once you finally just grasp the basic concepts, it's gonna blow your mind. It's gonna blow your mind. It really is, because now you really see why the market is making moves. Now you really understand why the market is doing what it does. So my biggest recommendation is to start dabbling into it a lot more. All right, start looking at the major news releases and start to backtest how the market reacts based off these news releases. It's gonna grow your confidence from a technical perspective, right? When you understand the fundamentals, guys, your technical game is gonna increase because now your confidence is gonna be through the roof. Oh man. Family, if you guys are getting some value, man, go ahead and just like the stream one time for me, please. If you guys are getting some value, family, go ahead and like the stream one time, man. We do have about 2 minutes left, under 2 minutes, family, for this release, so we're obviously going to watch that together. All right, I'm not sure. Again, we're not going to be forcing trades, right? So we're going to see what the numbers come out as. I'll give you guys my basis, my idea on the numbers. And then if there is an opportunity to get involved, you know, we'll go ahead and we'll push the button. All right, but if you guys are getting value, family, go ahead and smash that like button for me one time. Let me know that you guys are getting value. Because again, I say this all the time, but this is not stuff that you're gonna find on YouTube, right? There's really not that many forex YouTubers, family, that truly understand fundamentals, so they have to stick to technicals. And there's nothing wrong with that. You know, you got to understand technicals as well. It's very important. But I'm the difference maker, right? I want to be that guy that's on YouTube actually talking about fundamental analysis with confidence, because I have the utmost confidence in my ability to understand fundamentals. That caffeine just making you spit gems on accident. I'll tell you, I hope y'all see my energy increase and increase, because I'm already halfway through this damn frappe right here, whatever this thing is called, man. This thing is getting me crazy. I think getting me going. This is very educative, especially to a beginner like me. Thanks, Abel. I appreciate that. I love that. Let's go. That's the whole point. Himothy, yeah. That will influence GJ to go higher if those numbers come out higher. It could for sure. All right, indirectly it could. All right, so family, we are literally less than a minute away, 15 seconds away. I'm going to go ahead and bring up 2 different charts. I'm also going to bring up S&P over on this side, just so that we can see what is happening over here. 2 seconds, 2 seconds. Let's see what the market does. All right, indices initially spiking down lower. Let's see what these numbers come out as. Let's see. Come on, refresh, come on. Come on. Refresh, come on, website. All right, let's see. Still nothing just yet, family, still nothing just yet. Let's wait. Come on. If you guys get updated numbers on your guys' end, please let me know ahead of time. All right, let's see what the markets are doing. I mean, the indices are tanking right now. So based on how the indices are possibly reacting, let's see.
Where's the battery you bought yesterday?
There we go. Came out higher. There's only one left, and it's in the drawer to the left of the spoons and stuff. All right, so it came out higher. Oh my God. This is not good for the equities. This is not good for equities. Came out higher, family. It actually came out higher than previous. This right here shows that inflation is still very much here, and that inflation is still very much a big deal. This is probably going to continue to cause dollar strength, equity weakness, long term. That's big. That is big. Yo, Eric, you are hilarious for a GJ. Let's see what GJ's doing, man. Let's see what GJ's doing. GJ's still chilling. Let me go ahead and get off of this split screen real quick, right? Let's see what GJ's doing. I mean, GJ's still chilling, man. But again, listen, man. I love everybody's opinions and thoughts. I'm still very much bullish, GJ, man. I really am. Still very much bullish. Look at this spike down, man. Wow, what a wick. What a wick. Let's see, gold, dollar. Let's see, US 30. Look at this little gap that was left behind on US 30. Yeah, this is negative data, family. Like, this is not what the Fed wants to see. Like, this is not what the Fed wants to see. I'm gonna be honest, right? This is not what the Fed wants to see. But if for whatever reason we do spike back up, because the market gonna do what it wants, right? Again, this is more for a macro outlook of the markets. Keep that in mind. I'm going to be looking to short this thing, right? If we're able to pull back up, family, I'm personally going to be looking to short this thing, right? If we're able to see a push back up, I'm not interested in where we're obviously currently at right now at price, right? And I don't know, I don't know if we're gonna get this pullback, right? Maybe once we clear these lows, we grab some liquidity down here. You know, we might be able to see the market pull back some. But I'm shorting this like crazy. I'm shorting this like crazy. And that goes for all the indices, right? So if we are able to get some type of a pullback in the market, I'm going to be shorting. I'm going to be shorting for sure, right? Gold, similar concept. All right, gold gave us a nice little wick. But if we're able to pull back a little bit on gold, which we're doing now, I will be very interested in shorting this thing as well for gold. All right, I'm on the bullish side right now, guys, for the dollar for sure. I'm dollar bull 100%. I've been dollar bull for God knows how long. Like, I kid you not, family. Like, how many of you guys were a part of my last few streams when I was educating for IM? Right, because those of you guys that are newer to the stream and might have just found me on here, this ain't my first time teaching. Like, this ain't my first time teaching at all. Like, I've been teaching for the past 4 years now. I've been trading for 8 years. I've been teaching for the past 4. Right, and I actually come from, I come from a platform that's, that allowed me to teach. Let's see here. Me, I was. All right, we here, baby. We remember me. Yeah, because if you guys remember, family, when I was teaching in IM, like the last 6 months of me teaching, I was telling everybody we are going to be dollar bull for a while because of everything that has happened with COVID, right? With the printing, with stimulus, with inflation. So I've been dollar bull literally for the past 2 years at this point. And if we look at the dollar, I mean, we can clearly see that everything's been going pretty strong in my direction. Right? Pretty strong in my direction. And based off of this report, again, I wouldn't be surprised that if we do sell off a little bit, we actually end up going higher. In fact, like, this is what I would love to see, guys, here for the dollar. And even with this report, again, this is from a macro perspective, right? The Fed now is going to look at this core PCE number. They're going to see how high it came out, right? This is a crazy miss. It came out higher than the previous reading. So now we have to really consider what is going to be. They're obviously going to do a 25 basis point hike. Like, that's obvious. We know that. And I hate to even bring this up, but and I don't think it's going to happen, right? Like, I think that the chances of them actually doing this is slim to none, right? Just because that would spook the markets way too much. But there's a 0.1% chance that they do a 50 basis point now. I'm being honest, right? There's about a 1% chance that they do a 50 basis point rate hike now. There's a possibility, right? Because of how this number came out. Again, the Fed is using that. Let's go take a look at the Twitter sphere real quick, right? Let's go through the Twitter sphere. Let's see what they're saying over here on Twitter. Let's see. Look at this. Hot PCE data, will crypto dump lower? It should. Let's see what we got here, right? Let's see if we can find. Let's see what our guys are talking about. Walter Bloomberg. Let's see what he's talking about over here. Let's see. There was a Fed member that was speaking earlier today, I guess. Let's see. Fed master financial market alignment with Fed much closer than before. We're going to have to do a little more on rate hikes. We're going to have to do a little more on rate hikes. What does that mean? I don't know. Everybody's going to perceive this a little bit differently. We're going to have to do a little more on rate hikes. Again, this is a member of the actual Fed, by the way, saying this. FedMess says Fed will do what it has to do to cool prices. My funds rate was above the median in December and still think needs to be somewhat above 5%. There has been some good movement on inflation measures, but still too high. I am not prejudging size of our rate hike at the next meeting. Look at this. See, it's things like this, guys, right? That is very negative for equities. I am not prejudging the size of our rate hike at the next meeting. Why not? We all know that it should be 25 basis points. Why are they not coming out and just saying, yeah, we're going to do 25? Because there's a possibility of it not happening. Let's see what else we got here. All right, personal income that's due at 8:30. All right, so let's see what else. U.S. personal income has increased in January. Actually, it came out 0.6. It actually came out lower than what they were expecting. U.S. personal spending came out a little bit lower. Oh, actually came out higher. See, look at this, man. Look at this. Look at this, right? Personal income was supposed to come out at 1.2%. It came out at 0.6%. While personal spending was supposed to come out at 1.4 and it came out at 1.8, which means income, the money that you're making is decreasing. How much money you're bringing in is starting to decrease, but yet people are still spending. Make it make sense to me. It just doesn't make sense, right? Your income is decreasing, but yet your spending is increasing. Oh, man. Make it make sense, people. Let's see what the price index is talking about, right? Let's see. Came out 4.7% a year. Yep, this is all stuff that we just talked about. Let's see what else. U.S. short-term interest rate futures add to losses after inflation. Personal spending data. U.S. stock index future extends declines after economic data. U.S. 10-year rises 3.9%. U.S. 2-year rises to 4.7%. Highest since November. Look at this. This is how you know. This is how you know that there's a lot of fear in the markets right now, at least for the short term. Right, the U.S. 2-year increases to the highest level since November 4th. Family, when treasury or bond yields increase, that means that there's fear in the markets. As bond yields increase, that means there's fear because everybody's trying to run to the safe haven. Oh, man. I don't know. Am I the only one that gets excited when I read the data? And it probably could be just me because I actually understand this stuff. But this stuff intrigues me as a trader. This stuff is super interesting as a trader, family, because now we're able to see what they're thinking and what they're doing, and we're able to, pretty much have some type of idea based on the data. I love this stuff, man. I should have went to college for economics or something like that. I still might. Probably not go to college, but I might find some online courses and just take an economics class. Because this stuff is so cool. This stuff is so cool. All right, let's go see what Zero. He's pretty much going to be reiterating a lot of the stuff that's already being said, but let's see. Okay, this is the one we want to see. Let's see what Nikki Leaks is talking about. Nikki T, again, this is the mouthpiece of the Federal Reserve, family. Keep that in mind. So let's see what he's talking about. The core PCE price index rose 0.6% in January and was up 4.7% from a year earlier. The overall PCE index rose 0.6% in January, was up 5.4%. Okay, cool. Let's go ahead and see what this article is saying. Let's see. Consumer report to detail consumer spending, inflation January. Data could show strength in U.S. economy, complementing Fed's efforts to cool demand. Let's see. A report Friday will offer insight. Is this blah 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 blah. U.S. consumers increase seasonally adjusted spending at stores. Blah blah blah. Let's see. All the indicators have been pointing to a strengthening economy. Oh man. Look at this. All of the indicators have been pointing to a strengthening economy. Family, answer this question one time. If all the indicators are pointing to a strengthening economy, is that gonna help fight inflation? Yes or no? You know what? That's a good point, Chino. Let's go see what Mr. Meat Kevin is saying. Right? Let's go ahead and watch this real quick. I know Meat Kevin is live. He's always usually live for stuff like this. And let's see what Mr. Meat Kevin is talking about. If you guys don't know who Mr. Meat Kevin is, he's one of my favorite, financial YouTubers. Absolute beast. Come on, what's going with my mouse? Did my mouse just die? Give me a second, family. My mouse just died a little bit. All right.
Going up. That's bad. Personal interest income. Wow, with rates this high, it basically you're sitting at interesting once the humans actually start reacting to this data. If we end up buying this dip, that will be very interesting because I want you to know right now it's algos firing off. It's a very simple formula. If expectations or the results come in higher than expectations, sell. If they come in lower than expectations, buy. Very
Can you guys hear? Family? Let me
very
know.
simple algorithm you can program probably yourself as well. So not too terribly much of a surprise. Again, that this data is hot, but hey, whatever. 61 economists of okay, here we go. Only 6 of the 61 economists surveyed by Bloomberg forecast a personal spending gain of 1.8% or higher. Another hot January report, no question. Yep, agree with that. PCE core accelerated to 4.7% in January, above all estimates, and the month-on-month gain matched the high forecast. Inflation again coming in hotter than expected. Okay, we've talked about some of the headline numbers here. Let's go to the actual release as well and see what they've got here. So here's the actual report. So what do we have here? We've got personal income for January. There we go. 0.6. Personal disposable income, 2.0% on current dollars. Expenditures, 1.8. So again, this is where you could see we're spending more than we're making right now. And this kind of reiterates what we're seeing with the credit card data, right? The credit card data suggesting people are spending more than they're making. This is where there's a lot of, I like to say clickbait because I like to say it's kind of just like basic, but like there are a lot of folks going, oh, but Kevin, the personal savings rate has plummeted. Yeah, no shit. Like we're probably going through some degree of a recession. So people go into their savings that they have and they spend money to get through the recession. Businesses do that and people do that. No, duh. People's incomes go down in a recessionary environment when stocks go down and when, people are getting laid off. Duh. So showing the chart of the personal savings rate going down is just, it's redundant. It's like childish. It's simple. What we need to pay attention to is how much excess savings people have. And most people still have 4 to 5 times as much money as they had before the pandemic. So we have a long runway of still being able to spend through this. I'm not saying that's a good thing. It's actually one of the reasons we're seeing some of these inflationary numbers come in hot, obviously combined with the fact that you've got crazy seasonal adjustments that happen in January. So February is going to be even more important because January is like seasonal adjustment month. But whatever. Obviously, this is a hot report. Obviously, that's not good. Obviously, this is not the trend that we want. And obviously, that's why the stock market is taking a little poopsie doopsie immediately after the report. However, I want to see how the day evolves because I'll tell you, one of the most important things that you're going to get as an investor in the stocks today is if the stock market ends up green today, that's a sign, in my opinion, that institutions realize we're not going to get Paul Volckered and any dip is starting to turn into a buy the dip opportunity. Now, I'm not saying this dip is a buy the dip opportunity. I'm just wanting you to observe the market today. And if for some crazy reason we somehow rebound from negative 1.5% on the QQQ to positive at the end of the day, it's a sign that institutions are realizing, oh, damn, we've been off sides for too long. It's time to start allocating more cash to these levels. Grab these before they're gone in February when maybe those seasonal adjustments are gone. I'm not thinking it's all in time because obviously if we get a hot Feb, you're going to be like, oh, why did I buy? Right? Hot Feb would be like worst case scenario because then you're reiterating the January trend and the argument that January is just a seasonal adjustment disaster, or maybe January is hot because January was a lot warmer than December and people are buying spring clothes in January. That goes away instantly. Look, I don't know. I mean, if you follow me on Instagram, it's basically at this point like following my OnlyFans. Okay, I don't have an OnlyFans, but on Monday I was skiing without my shirt on because it was hot. It's like February in Lake Tahoe, and I'm like, I'm sweating my butt off over here. And even after I get, splashed with snow, I'm still hot. It is weird. It's like it's a weirdly warm winter. I know obviously that's just an anecdote, but that is also what we're seeing in the data, right? So that motivates you to buy different clothing, right? And then leads to more retail spending and people have more. Anyway, okay, so take that as you'd like, but obviously pre-market here and maybe at the beginning, market open, whatever, we get some red. If we continue to close red, okay, then this is a legitimate concern. If we actually rebound like we did yesterday off of this, because yesterday was insane. I mean, yesterday was just like straight down and then just like straight back up to close higher basically than where we started today. Insane. But anyway, what do we have over here? Increase in personal dollar income in January was led by compensation, reflecting private wages and salaries. Obviously, these are just the lagging embers of inflation. No surprise. Government social benefits decreased in January, reflecting a decrease in other benefits. Fine. One-time refundable tax credits, Social Security, COLA adjustment. Oh, that's another thing to remember too is you have the COLA adjustment that took effect in January. So people's incomes actually rose thanks to getting more Social Security money starting in January. Remember when they announced the COLA adjustments and like when do they do it? Like September, August?
Just a quick note I wanted to add, family. Again, if you guys did want to understand fundamentals more, this is the stuff that you have to do. You actually got to listen to people like me, Kevin, break things down, give their own thoughts and opinions on the market. He is a licensed financial advisor, so he does have, the credentials to actually speak on things like this, right? But if you guys do want to learn more on the fundamental side, guys, this is what you got to do. You got to come here. You got to start listening to these people speak, listen to various analysts, and then just start to take what they're saying and use it. Just want to add that to that.
Widespread, led by motor vehicles and parts, as well as other non-durables. Durables are like cars, washing machines, dishwashers, and stuff. With services, the largest contributor for the increase was spending for food services. That's interesting because food services is actually part of core, but food is not part of core. See what I'm saying? So it's like, even if food increases, and then you're like, oh, well, I want to look at core, which takes out food and energy, you still have food services that are affected by food prices. And so if food service prices go up because they raise menu prices, that's an increase in basically food services. And it's related to food going up, even though it's supposed to be part of core, which is excluding food and energy. It's the same thing as saying like, my delivery fee for my new gym is $100 more expensive because gas is high, but my gym shows up as more expensive on my CPI report, even though the core CPI says, here's your gym without the energy costs, right? So you can see how in like food and energy, which is very volatile, still continues to flow through even in core. But anyway, personal outlays increased, personal savings decreased from prices from the prior month, blah, blah, blah. Okay, real. Okay, let's see here. Let's look at some of the other data or related materials that we have here. Full releases and tables. Yes, this is what I want. Let me get this up. In the meantime, let me quickly see what Wall Street is saying. PCE reflected an increase in both goods and services. Spending, food led the way. Yeah, see, they're picking up. Wall Street's picking up on this as well. Hey, they just picked up on that 30 seconds ago. Maybe they're watching us right now. Hey, fine with me. Hey, if you're watching me, hi. Anyway, so there was really no disagreement across the raft of indicators in January. Strong for the economy, jobs, consumption, inflation. Will this be sustained? That's the big question right now. A lot of strategists right now talking about, is this a re-accelerating of inflation? Is this the second wave that everybody's been fearing? That's maybe why the stock market is falling and then sort of selling off a little bit right now. Yeah, that is a very fair question. That's why the report that comes out next month for February would be so important. Okay, is there anything else interesting in some of this data? I do think that food services item was very, very interesting and quite important. No, not really. I mean, we'll get some tables here. Oh, yeah. Okay. This actually will be really, really interesting. So let's go to, I want percentages. Please give me percent changes because now we can see categorically what's happening. Oh, dear. I'm dying. Here we go. Percent change from preceding month. This is so bad. I'm like choking and dying. Anyway, so here we go. Wages and salaries. Oh, good Lord. 0.9% seasonally adjusted monthly rates. That's absolutely horrible. 0.9. Good Lord. You realize how high a 0.9 read is? Oh my goodness gracious. It was 0.4 in November and December. 0.9? I mean, this is going to make people scared of a wage price spiral. That's 10.8% annualized. But again, some of that has to do with like COLA going up. But damn, 0.9, that's bad. Personal interest income. Wow, with rates this high, it basically you're sitting at 0.1% of an increase. That's nothing. Personal dividend income. Boy, that's a volatile category right there. Rental income of persons with capital consumption adjustment. I don't even know what that is. We can figure that out. So this is, Fed swaps. Okay, yeah, here we go. Fed swaps are now fully pricing in rate increases in March, May, June. Yeah, we've kind of been expecting that already, though. 3 more 50 basis point hikes, right? That brings us to 5.25%. So from 4.5% to 4.75% in the next meeting to 5 in the next, and then 5.25 in the next. Yeah, that kind of is what we've been expecting. So the question now is the terminal rate moving up? It probably will on this. The terminal rate was before this report at a high of 3.7 or 3.3. What am I saying? 5.37 was the terminal rate before this. And okay, it's moving up a little bit. There's now this expectation that potentially there's a rising risk for a 50 BP move in the next meeting. I disagree with that. I think if anything, they would just add a 25 BP or the market will start pricing in a 25 BP for July if it needed to. But I don't really, honestly, like bottom line on all of this, I don't think this really changes anything because again, it's just like, it's literally like replaying the nightmare of personal consumption or PPI, retail sales, and CPI for January. It's literally like we're playing the same movie over and over again for January. Like, we get it. The January numbers are hot. We get it. Like, how many more times are we going to play the same movie over and over again? It's like watching the Titanic on repeat and being sad that people are dying. It's literally what these reports are. It's over and over and over again for January. It's the same crap. We get it. January was hot. I know. It was hot for winter as well. Next month's data is going to be very important. We want to break this trend because the last thing we want is all of these reports next month to be confirming this trend. That's what matters at this point. I don't think this changes anything in terms of the Fed going for 25 BP next meeting. I don't think there's any way they go for 50. I'll you know, I don't know. I'll make we'll have to make some kind of bet on that because I feel so confident on that. But sure, you know, like if this stuff is a trend, it's bad. If it's not a trend, it's a buy the dip opportunity, which I still believe that we want to pay attention to what the market does today. Because even if it's super red at open, if it recovers towards the end of the day, the institutions, and they could be wrong too. Institutions are wrong all the time. Institutions could be yelling at you going, especially if that boost happens towards the end of the day. Remember that most ETFs do their transacting at the end of the day. So if you get, well, that could also be representative of some retail inflow since ETFs are an institution, but they get both retail and institutional investments, right? But often if you see big inflows at the end of the day or big kind of moves up or down at the end of the day, it's usually institutions pulling the trigger. So they come up with sort of their strategy for the opening bell and then the closing bell. So you usually get the most volume at those times because of the institutional strategies going in. Kind of interesting. Kind of fascinating. Play the buy the dip video. Well, let's see what happens throughout the day. See, but remember, you know, like Alex Kerr here says, disinflation is transitory. Poor JPY. this is just a reiteration of the same crap from January, right? Like this is not a trend. QT. Yeah, look, Steve's talking about QT. Yes, the Federal Reserve is quantitatively tightening right now. It's similar to what we saw in 2018 and 19 in terms of the runoff, the contraction of the money supply. The contraction of the money supply from an Austrian economics point of view could actually be providing us all of the evidence we need to suggest that inflation will end up being transitory. Yeah, I mean, that's part. What nobody really knows how quantitative tightening is really going to affect the broader market. Nobody really knows. And I think that's why the Fed is going as slow as they are on that. They don't want to break anything. So we'll see. It'll be really interesting. But yeah, it'll be fascinating to watch the institutional reaction today. Watch how the market closes today. Obviously, 10-year Treasury yields still holding on to that 3.94. We saw a pump when in real estate when Treasury yields fell to 3.3% because people were under the impression that this is it. This is the bottom. I'm like, not so fast. We'll see. Bottom's not in yet for real estate, in my opinion. So, I don't ever want to come across as like I'm only a bull. Like I'm definitely bearish on certain parts of this economy. But anyway, we'll see what the next data sets show. But in terms of PCE, am I really like, oh my gosh, this changes everything? No, this is just like, again, it's Titanic all over again. Like I saw this movie. I saw this movie on the jobs report. I saw this on the PPI report. I saw this on the CPI report. Why am I shocked that PCE came in hot? It's like the last indicator of the month. It's boring. It's like, thank you. Thank you for playing this for me again. Now start paying me for watching the same movie over and over again. All right. Now we got some more stuff to talk about, like Tesla.
All right, so let's go back to it, family. He's pretty much going to be talking about stocks and a bunch of other things. But again, for those of you guys that do want to understand fundamentals, guys, me, Kevin, is definitely one of my favorite YouTubers by far. Probably the one that I watch the most when it comes to just getting the data, because he's very, very analytical. He's very, very knowledgeable, right? And he uses logic with everything that he does. But for a lot of you guys that are probably newer to the fundamental side, a lot of the things he was talking about is probably like a foreign language to you guys, right? Because again, if you're new to this space, you don't understand a lot of these things that he's talking about. So it's going to take time for you guys to truly understand, how or what he's saying and how it's going to interpret to the markets, right? Because it does take some time, guys, to truly start to get that stuff down packed for sure. But he pretty much just reiterated what I said. There is a possibility about a 1% chance of a 50 basis point rate hike, but he doesn't see it neither. Like, I would be shocked, if they do something like that, because that would be too much of a shock for the markets. All right, because if they became aggressive again, now confidence in the Fed is just going to absolutely dwindle. All right, confidence in the Fed is just going to go to the floor. It's going to go to hell, right? And that's not a good thing, right? We want to be, confident in what the Fed is doing and their, their policies that they're implementing, So yeah, so I don't think a 50 basis point is going to happen, but, again, he did say, it came out hot. Inflation came out hot. PCE numbers came out hot. These are things, guys, that we have to be aware of, because that's what's going to influence a lot of these markets. Now, let's see what the market has done since the release, though, guys, right? So there's really not much. I mean, we do have the 9 o'clock candle about to open up in about 10 seconds or so, but overall, we've seen initial dollar strength. We've seen initial indice weakness. Gold also ended up probably continuing to drop. Yes, it did, right? And I do believe long-term we can see this continue. One thing that, me, Kevin, just said as well, guys, that if this actually rebounds, though, right? If the market does end up rebounding to close out the day, that could be very indicative of what smart money's actually doing. Okay? If they ends up closing up back bullish for the day, then that is something that we have to be mindful of, right? Because that is more so the institutions, the banks, right? That they're probably looking at the market a little differently, and they're not really taking, PCE, and they're not looking at the PCE numbers coming out hot as something that's going to really change the course of inflation coming out lower, which is going to be interesting. I would be shocked if that happens, but I also wouldn't be too surprised, to say the least, because there's so much mixed data out there, right? There's still so much mixed data out there, guys, which is why, everybody's trying to figure out what's happening, right? And this is something I want you guys to be mindful as well. you know, as traders, when we're trying to read the news, you have to be aware of what the rumors are. But because of how mixed the data is, the rumors are probably, you gotta be very careful with that, because investors and traders are now looking at what the actual facts are coming out as because of how mixed the data is. So you want to play the rumors, but you don't want to play the rumors so far out to where you're trying to predict things that are not even close to actually happening, right? I think that's what a lot of traders end up doing, right? They start to try to trade the rumors of a potential rumor, and that's dangerous. Playing the rumors is cool, but playing rumors of a rumor, that's dangerous. And that's what I think a lot of traders are probably trying to end up doing. They're trying to trade the rumors of the fact that there could be rumors of a potential shift. And that is what's going to lead people to be way too early to the markets. Right now, you're going to be way too early. Now you're going to be chasing this pipe dream. Now you're going to be chasing the markets, trying to expect the thing to turn around, when in fact, we really should be taking it data by data. Right? The reason why I'm so confident, guys, in a lot of these moves that I'm doing, because I'm really just analyzing the data, and then I'm using the actual rumors of the data to make my decisions. But what I'm not doing is trying to play the rumors of a rumor. That's crazy, right? Trying to play the rumors of a rumor, that is absolutely insane. All right, does that make sense, family? Right? You want to play the rumors, but don't get too far ahead of yourself that you're trying to play the rumors of a rumor. Right? Like that's just crazy when you even think about it like that, right? Play the rumors, but not the rumors of a rumor. Oh, that's a bar, actually.
I'm taking a kiss from leaving the baby.
Okay, baby. That's a bar right there. Play the rumors, but not the rumors of a rumor. Oh, man. Because that's how you start chasing the markets. Because that's how you really start to get caught up, you know, marrying a potential rumor that really hasn't even played out just yet. Like, man, that's a bar. Hold on, I got to write that down, fam, because that's such a nugget. Like, that is a bar. And that's what I think, you know, again, a lot of traders could be positioning themselves to do now. Right? We understand that there could be a potential for shifts in certain sentiments and certain policies, but we can't, just like what Oscar said, right? Don't outsmart yourself. Don't try to be too far ahead of the markets to where now you're just trying to chase this pipe dream, and that's literally just going to lead to a lot of downside in your trading and your investing. That's a bar, man. Please do not let that go over your head, what I just said, because that is a freaking bar. Right? Play the rumors, but not the rumors of a rumor. Oh my God. Yo, that's crazy. I just shocked my own self, family, and I just thought about that right now. Just, it's mind blowing. Mind blowing. Hold on, man. Y'all think I'm playing? I'm writing this down because that's crazy. That's gonna be my next TED Talk. That's gonna be my next TED Talk. Playing the rumors, but not playing the rumors of a rumor. What? That's insane. That's insane. All right, cool. Let's see. That's going to hurt some feelings. Cannon step back. Yep. Next social media post gems. Yeah, no, that's crazy. Like, when you actually think about that, sheesh. Yeah, Kyle, that's nuts. Right? You don't want to get too ahead of yourself, man. Because getting too ahead of yourself can be a bad thing. For sure. Like, and that's what I think, you know, certain people could catch themselves doing because they're trying to be too early to the markets. And when you're too early to the markets, like for an example, right? Okay? Like hypothetically speaking, right? And again, we're just going to use random broad examples here, right? Let's say, you know, the rumor, right, is that the Fed is still going to be hawkish, which that's exactly what we're dealing right now, right? The Fed is still planning on raising interest rates at least for the next 3 meetings, 25 basis points, okay? So if the Fed is planning on raising interest rates for the next 3 meetings, that is still very much dollar bull, all right? But because we are now with the expectations or the possibility of them wanting to shift in the future 4 or 5 months down the road, now you're trying to sell every single rally that we get in the dollar because you're trying to play the rumor of a rumor. Right? The rumor is that they're going to raise interest rates. That's the rumor. That's the rumor that we should be playing. Right? The rumor that they're going to raise interest rates. That's the rumor. But trying to play the rumor of a possible pause, that is very, very difficult. right? Because now that's going to have you trying to sell this top. That's going to have you trying to sell this top. That's going to have you trying to sell this top. When in reality, all you should have done is play the current rumor and bought this low. And bought this low. And bought this low. Oh, man. Does this make sense, family? Does this make... family, I believe these nuggets right here are worth 100 likes. Do you guys agree with me? Can we get 100 likes off of this? Can we get 100 likes off of that? And drop some threes in the chat if this is some sauce, man. Because this is crazy. Like, I'm mind blown even just saying this stuff. Because it just really just hit me right now. It just smacked me in the face. What I think a lot of traders are trying to do. It just, it just smacked me in the face a couple times. So, more of the story is, play what the rumors are saying correct. The rumors are that they're going to raise interest rates. That is bullish. That is bullish to dollar long term. Now, the rumors of the rumors, which is eventually they're going to pause interest rates, that's way too far down the line. Like, yeah, we know that possibility is going to happen. We know that eventually, yeah, they're going to do that. But that is still so far down the line that we cannot get ahead of ourselves. Because that's going to have us, again, trying to sell every single rally that we see, when in reality, we should just be sticking with the trend and buying every low that creates itself. And that's what I've personally been doing. Why? Because I'm playing the current rumors, not the rumors that I think can play out later on in the future. Right? When we get to that point, then I'll start playing there. Right? Once we get to, that the benchmark, or not the benchmark, but once we get above 5% interest rates, right, to around that 5.2, 5.3, which is where they think they're going to start to look for pauses. Then when we get to that 5.3 interest rate, then I'll start to play the next current rumors. But we got to stick with what the rumors are right now. Right, Kyle? What is the 80-20 rule? Right, we got to follow Kyle's 80-20 rule. Kyle, what's the 80-20 rule? Right, we have to be able to follow the 80-20 rule. Right, that the market is going to trend 80% of the time. Continuations over reversals. Yeah, Kyle. That's exactly what we have to do. Right, because the current rumors are leaning towards those continuations. Instead of trying to figure out overall reversals, let's stick with the continuations of what the market is doing. Because that's what the current rumors, the relevant rumors are telling us. Not everything else. Right? The current, oh man. Yeah, this is, I gotta clip this video right here. I gotta create a bunch of little videos out of this video right here, family. I'm gonna drop a bunch of different, I'm gonna drop all these gems right here. I'm re-uploading to my channel as separate videos, so that you guys can come back and rewatch it whenever the hell you want. Because that's probably one of the most powerful things I said today. Play the rumors, but not the rumors of a rumor. Oh my God. Man, what a time to be alive. What a freaking time to be alive. All right, so let's see what else we got here, though, family. Let's see. Take one more quick look at the markets, and then I got to go ahead and be a father to my children, specifically my 2-year-old, because my other 2 are actually on their way to school, thank God. So let's see what we got here. I'll take one more glance at the markets, guys. Obviously, the dollar is pushing. This news was very, very much dollar bullish. PC index, for those of you guys that might just came on, guys, absolutely came out super, super hot. Inflation came out super hot. Again, PCE price index, family, is the preferred gauge of inflation for the Fed, right? So CPI absolutely matters. PPI absolutely matters, but we cannot ignore the fact that PCE is also very important, right? And according to PCE, we came out super, super hot. Okay, so that is very much dollar bull. That is very much indice weakness, right? That is very much gold weakness. That is very much foreign currency like the euro, like GBPUSD, right? Like AUDUSD, NZD, like all that stuff is very, very much bearish for right now. At least, again, for right now until data states otherwise, right? So I'm still going to be lining towards the dollar buy side, guys. Obviously, there's not much things that we can do right now. Like, I wouldn't jump into any of these trades today, just because during London session they already made massive moves during London. So there's nothing that I'm really interested in right now, right? But going next week, when the market opens back up on Sunday, Monday, I'm going to be using this bias that we created today to help me out with my trades next week. Right? I'm good on the markets for today. I'm not chasing none of this. During London session, this thing already moved. Right? Gold already dropped. Like, yeah, you could possibly look for some short-term pullbacks if you want to do that, but I'm good on that. I'm not chasing the markets. A lot of these moves already played out. Right? The only thing that I would consider is probably GJ. Right? And I know, Wally, I know you hate to, I know you don't want me to say this, Wally. I know you don't want me to say this, Wally, but yeah, the only thing I would be interested in is probably going to be this GJ. Maybe if we come back down, fill some of this wick, I'm going to be looking for some buys. Right? That's probably the only thing that I might consider for today. Just because we really didn't see too much movement at all in price. We did see this nice little spike up during London session, which again is amazing. It's something that I personally been predicting. But yeah, I would want to see this push back down and then, you know, go ahead and expect more continuations. Let's see. I'm currently bullish GJ to short term. Nice, cool. I mean, where's going to be your short term? I'm guessing probably going to be above this 163 is where you're going to be targeting. Or you'll be looking for some possible shorts up here. 163 is going to be my guess. Right, that's going to be my guess. Right, but yeah, I'm very much bullish. All right, 162, yeah, pretty much. Yeah, and shout out to Wally too, man. Again, somebody that has been absolutely going crazy. You know, and I'm excited to see really how far you get, bro. Because you've really been showing out. You've been showing out in our chats, bro. And I love it. I love how active you are, bro, for sure. But yeah, you know, I'm bullish, guys. So if we are able to maybe fill some of this wick, maybe come back down to around this 162-200, I'll be very much very much interested, you know, in seeing this go ahead, go higher. And just for, you know, just for documentation purposes, family, I am very much bullish to pound yen. Again, I could be the only one on this. I think it's me and Eric are probably the only ones, at least in our community. That are only ones that are bullish, you know, this. So I'm very much bullish this thing. All right, I'm very much bullish on this. All right, so I think not only are we really gonna make it up to this 168, but I'm so bullish that I think we even come out and clear these highs. All right, I think my target is 175 for GJ. My target is 175. All right, that's my target. I could be wrong, but that's my target for sure. Let's see. I'll double down on our bet. Let me know. I mean, listen, man. I'll double down on it if you want, Wally. If you want to shake on it, bro. Like again, just understand you're gonna be blessing 2 family members now instead of 1. Family. I'm gonna be honest with y'all. Right? We got a bet going on, me and Wally. Right? You know, he believes price is gonna reach. I don't want to. What are your numbers, Wally? Where do you think price is gonna go? Right? I want to. What's your numbers? Right? Where do you think GJ is gonna go? I think we're gonna reach 175. He believes we're gonna reach much lower. I don't want to, you know, speak on his behalf. Just give me a number, bro. 150. So you think 150? Right? He thinks 150. I'm thinking 175. And whoever is wrong has to pay for a new student to join our community. All right, join the Profit Society. So if you guys want to get access, and if I'm wrong, you might want to get on Wally's good side. You might want to get on Wally's good side because he might bless you with a, you know, access to the free community or to the community itself. I'm just saying, go be buddy with Wally. Because if I'm wrong, you know, I gotta bless people in. If he's wrong, then he has to go ahead and purchase a membership for, you know, for 2 students now. That's gonna be interesting. All right, let's see. GJ will be at 157. I mean, that's tough. That's tough. That is tough. It's very possible. Again, if I'm wrong, then I'm wrong, right? Listen, I'm a grown man at the end of the day, right? I know how to take accountability, you know, for what I'm wrong. But I just don't see me being wrong. It's tough for me to be wrong, or it's not tough for me to be wrong, but it's tough for me to think that I can be wrong, especially based off what happened last night, right? Do I have to bring it up? I think I do. All right, especially based off what was happening last night. You know, let me just bring it up one time for you guys. You know, so the Bank of Japan guys, right? And the reason why, again, I'm so bullish is because of the difference in bank and in central bank policies, right? The Bank of Japan is still very much negative interest rates while everybody else is not. They're still very much easing. They're still very much printing. They're still very much not doing shit to help their currency as a whole. So I'm still very much bullish, right? And based off last night did not change my bias. In fact, last night's reports and last night's data, you know, from the Bank of Japan only helped my bias, in my opinion. Like, it only gave me more confidence, right? So, like, look at Bank of Japan governor, underlying inflation is expected to rise gradually. We'll take the time to achieve da-da-da. That's not good that's not good for us. But these next ones are. Current easing is appropriate. Bank of Japan needs to firmly support economy with easing. And this is the thing, too. Like, I wonder who the hell their analysts are, because it doesn't make no sense what they're actually trying to do. Like, it really doesn't make sense, right? They're trying to continue to ease, and that easing to support their inflation, which normally that does not work out. That literally makes no sense, right? If you want to fight inflation, you start tightening. You don't ease. You don't continue to ease. So that doesn't make sense, granted, right? Just want to throw that out there. But based on what they're saying, like, again, expect CPI to have hit peak in January, which means they do not expect CPI to continue raising. They think that the peak was just the one that just came out yesterday. All right, let's see. Bank of Japan tour if stable, 2% in sight. Bit of a choppy yen reaction to comments from the Bank of Japan governor nominee. He seemed to back easing strongly. While at the same time they can move towards normalization. Easing is not good for the currency. Whenever you hear the word easing, that is not good for the currency. That is going to continue to devalue that currency. All right, and he also says he expects inflation has peaked. Again, that is not good for the currency. All right. Bank of Japan will stop massive bond buying if 2%. See, this doesn't make sense, though. Like, this literally makes no sense. They will stop buying bonds if 2% target is met. You need to stop buying bonds now if you want a 2% target to meet. Like, I don't know what the hell they're doing over there. And again, obviously, they have a lot more smarter people doing their analytics over there, right? I'm just me, little old Abel on YouTube, right? I'm just a YouTuber here, right? And they're paying analysts to give this data, right? But this, in my opinion, makes no freaking sense, right? It just doesn't make no freaking sense. If you want to, and this is why, again, like, I'm still very much bullish, but after reading this last time, I'm like, yo, like, this literally makes no sense. If you want to actually slow down inflation, you stop buying bonds. You stop easing. You stop printing money. But in their eyes, if they ease even more, that's going to help them control inflation. Make it make sense to Bank of Japan. Either way, that's all very, very bullish, in my opinion, for the yens. So I'm very, very much still bullish, GJ. And my target is 175. In fact, if we end up closing, if we end up closing as a bullish engulfing here, say hi to 168. Say hi to 168. I'm just putting that out there, right? And big shout out to you guys that helped me get it to 100 likes this stream, family. I appreciate y'all so much. It means a lot. Let's see. I'm waiting for GJ at that 158, 159 level. So what I think can happen, right? If you guys really want to see my path, obviously there's a good chance that we just fly, and that'll be cool in my opinion. Like, I actually have entries down at the 160 level. You know, I actually called out entries to the community down here. All right, so I still have a very, very small position open, right? Again, I only have about 50% of my trade open here. And this is just more so because I want to have this entry when we reach the 175 so I can have a crazy, crazy screenshot to show. All right, that's more of an ego type of thing now, this entry, which is why it's still open and it's still available, right? It's more of an ego thing, and I get it. All right, having an ego in trading is a double-edged sword, right? You want to have an ego to understand your confidence, but you don't want that ego to also cloud your judgment, right? But this is more just for shits and giggles, this entry down here, right? But yeah, this is, in my opinion, still very much bullish. But what I wanted to see, right, what I wanted to see with GJ overall is I would have loved for price to come back down towards this 159, right? Get below this level of liquidity right here where my entry was, right? Fill some of this imbalance, fair value gap, retest maybe this little bit of an order block, and then from there I wanted to continue. That's really the path that I could truly see, right? And it's still very possible for this to happen, right? But this is the path that I want to see. If we do get back below 159 for whatever reason, and we actually clear these lows, right? We capture all this liquidity that I believe is there. We go ahead and we fill this imbalance, this fair value gap, this whatever you want to call it, right? This inefficient price action. I don't care about the terminology. It all means the same thing, right? But if we do come and we clear this, I will probably be loading up a lot. Like that might be the heaviest trade that I throw this entire year, because I'll probably be risking a good 3-4% on that position, just being honest. Like, I'm going all in with that if we're able to get that. All right, that's if. Okay, that's if. All right, so I don't know. That's what I would like to see, but I don't know if it's gonna happen. And if we do close as an engulfing family, I'm gonna be honest. Like, if we close like this, a lot of you guys know what my favorite pattern is, right? This pattern right here on the daily. Okay, we ended up wicking below previous day's candle. We ended up grabbing liquidity below all these daily candles, and now to immediately shift and close bullish. That is a super, super bullish candle in my opinion. Super bullish. So if we close like this currently, as we sit, I'm definitely expecting us to continue higher. Definitely expecting us to continue higher. Okay? All right, let's see what else we got here. FFS this is a complete joke. I have just finished trading. This guy is still taking not one single trade alive. I mean, it's a Friday. It's a Friday. It's a Friday. Ra-ta-ta-ta-ta. Shout out to you though, right? I appreciate you, man, for commenting at least. Thank you for helping the engagement. Thank you for helping us grow. You know, definitely appreciate y'all. Again, family, again, please. One thing about me, guys, like, I encourage everybody's comments, right? Whether they're positive or whether they're negative, right? So you guys, I appreciate you guys, you know, obviously, you know, defending, you know, but again, it's not even necessary, right? You guys can ignore them. You know, let me do the talking, right? Because one thing about me is my confidence is so high in my ability to trade, I don't got a goddamn thing to prove to nobody. Like, at all. Right? Like, this is a free platform at the end of the day, right? Everybody has the ability to give their own thoughts and opinions. So by all means, you know, rat. You know, for one, that word is kind of crazy. Rat, right? But, you know, I do appreciate your comments, bro. You know, it is what it is. You know, I appreciate it. You know, everybody has the ability to give their thoughts and opinions. We're on YouTube. You know, and I encourage everybody to do so, right? Whether they're positive or negative. It is what it is. I encourage it. All right, I'm not one of these traders that's going to get emotional over those comments. I don't care. All right, I know what my account looks like. I know what my students' accounts look like more than anything. It's not even about me. I know what my students are doing. Right? So it's all love at the end of the day, man. I appreciate you right at the end of the day. Thank you so much for commenting. I appreciate your opinion. And hopefully next time you come on this stream, if you do come on one of my streams, you're doing it when we're actually calling out trades. For sure. Right? We kill him with kindness, family. Just know. Right? We kill him with kindness. Let's see what else we got here. I know everyone questioning that UTAD right now. Listen, Wally, man, I don't know. I can't. Yeah, we're going to leave it at that. What's your take on gold? Yeah, let's go take a look at gold real quick. So, again, I do believe gold is just going to continue to drop. Again, this data that just came out, guys, is just reiterating more bearishness in my opinion. You know, I think that we really are going to see continued selling pressure here for gold. Like, I would love to see gold, guys, reach down below this 1726, which is a little bit of a ways to go. You know, we are on the weekly time frame right now, right? But I think that this is a very interesting level that we can realistically actually see gold reach towards, right? So if you guys are looking for anything on gold, in my opinion, of course, I do like the sell side overall. Now, there is a little bit of imbalance that we do have above here as well. All right, so price could also come up and reach this imbalance as well, you know, before we do it. But I'm very much bearish. You know, like, there's nothing over here to the left. Like, this is not a strong low. This is not a strong low. These are not strong. Like, all this right here, all of this choppiness, like, the price is going to run through that with ease, like, with no problem whatsoever, like, at all. Right, so I'm very much bearish. Again, there is a chance though, for whatever reason, you know, if this thing does pull back, it probably will be just to go ahead and capture some more liquidity above 1900, and then go ahead and continue lower, or price can just continue lower right from here. Right, so that's my biases, my plays here on gold. I will be looking to continue sell side pressure here on gold personally. I'm using the data to overall figure this stuff out, family. It's not me just saying, oh yeah, no, I'm using the data, right, based off current data. Based on current PCE numbers, based off the rumors of the Fed actually raising interest rates, that is what gives me the confidence in continuously selling gold. So I will still be personally looking to sell gold for sure. Let's see. I appreciate you dropping knowledge. I appreciate that 2 wavy. Let's go. I appreciate you for tuning in for sure. Let's see. I'm with that though, bro. I see a violation. I love that inverted head and shoulders though. I know y'all don't like the patterns, but it's all confirmation for me. Yeah, I mean, it's not about the patterns. Listen, I'm a big market structure guy, right? Market structure involves those patterns, right? So listen, if it works, it works, 100%. Right, so yeah, you know, the patterns are there. You know, the patterns are there 100%. And you know what's crazy? An inverted head and shoulders also is so easy, right? A lot of traders, you know, when we're looking at, especially from like a smart money concept, right? What do people want to see? Right, we have the range. The market is building up liquidity on both sides. All right, then we go ahead and we run the high. Okay, we grab liquidity, and then we immediately shift to the downside. I mean, is this not a head and shoulders pattern as well? Is this not a head and shoulders? 100% it is. Yeah, right? This is still a head and shoulders, right? So even these smart money concept type of patterns, they're still showing head and shoulders, right? It's just, again, people want to brand things differently. They want to take their own style and brand it up for marketing purposes, right? So yeah, you know, again, the patterns are still the patterns, right? Whether people want to admit it or not, it's all very, very similar things that are being looked at. All right, so let's see what else we got here. Any ideas on Euro USD? It's gonna be similar to gold. You know, I'm very much bearish this as well, right? I think we are. I'm interested to see how we react at this level that we're at now, right? Because we are retesting a very strong level of demand right now, right? And this demand could very much hold, but I am very much bearish this, right? Whether we actually break this and continue dropping from there, that's a possibility. You know, or we actually spike up a little bit from here, maybe get above this level right here into this little liquidity pocket, and then we go ahead and we sell off from there as well, right? But overall, long-term perspective, I am bearish, right? I am bearish this. Now, again, I'm not going to be looking for no trades right now, family, all right? So if you are on the stream more so looking for ideas, then it's probably not the stream for you. This stream was more so to see what the news was going to be like and then to create a bias going into next week. That is the point of this stream right here. Right, is to analyze the news, the fundamentals, see what price index PCE came out as, and then we create a bias for next week that's going to allow us to find some setups. All right, let's see what else we got here. Hey, but we wanted to tell this next week. Yeah, right, Eric? Oh, man. You think it will recover anytime soon? I mean, again, this demand zone is going to be telling, right? It depends on how we play off of this demand zone. I know I'm not recent, but that would be funny if the daily fade off the last 2 candles on GJ. That would be crazy. All right? That would be crazy. Yo, what do you think about IM? I mean, I don't have anything negative to say about IM, right? If you guys don't know, family, like, that's literally where my background comes from, right? Like, again, I was an educator for IM. Like, I was an educator for them, right? So I have nothing negative to say about that platform. That platform, you know, put me in a position to actually educate, right? Put me in a position to actually go ahead and grow. Right. In fact, like this picture right here, who's that? Look at this cool guy right here. Right. This event, you know, there was 3,000-4,000 people. I was like 1,000 people at that event. Not that picture. Right. But look at this, an IM event. All right. It was me speaking in front of thousands of people. Right. Look at this one. All right. Trinidad and Tobago, an IM event. Right. Speaking in front of 3,000 people out there in Trinidad and Tobago. Right. So I personally love. I'm not gonna say I love, right? But I have no issues. Or you guys can't even see it. Hold on, let me bring this up real quick, right? Because now I wanna just talk my issue a little bit. Let me see. Hold on. Can you guys see this? Hold on, family. Hold on. Window display. Hold on, family. I think I might have just messed up the stream. Give me 1 second, y'all. Give me 1 second. Alright, so here we go. Yeah, so again, this is an event from me, right? Educating at IM. Okay? Like, again, I would never be the one that comes on here, guys, and try to talk ish about a platform that put me in position. Alright, look at this. Thousands of people in attendance. Thousands of people in attendance there. Alright, and again, I have so many more pictures that I could go through, right? Here we go. An event out there in Trinidad and Tobago. Right? Trinidad and Tobago. 3,000 in attendance. Right, I was out there doing my thizzle, right, showing love. Right here, an event at Atlanta. Right, there was another 1,000 people at this event. Again, an IM event. They put me in position. Right, they gave me the opportunity to actually teach. So I would never be the one talking crap about IMs, right? So if that's what you're hoping for, yeah, you're not gonna get it, buddy. You're just not gonna get it, because I have nothing negative to say about them. Again, they allowed me. They allowed me to become an educator, man. I got nothing but love and respect for that platform. Whether you guys love them or not, that's totally obviously your choice, your decision, but yeah. Yeah, buddy. So besides that though, family, again, I do appreciate you guys. Thank you guys so much for rocking with me today. You guys are absolutely insane to be live with me. You know, to be able to hear me speak, talk my stuff. You know, you guys are absolutely phenomenal. I appreciate you guys. You know, I will be live again on Sunday with the team, the Prophet Society. We will be doing our weekly overview on Sunday. You know, so make sure to be following the Prophet Society YouTube channel if you guys are interested in seeing what not just myself, but the rest of the team is. And trust me, like, I think we might be the only YouTube channel or the YouTube community that is more like a debate show. Right, like how many of you guys be on lives when we actually be debating back and forth? Right, like this is like the only YouTube debate show on that I've ever seen in my life. Right, a YouTube debate show. Like, think about that. A Forex debate show? What? Right, like that's really what we be doing. Right, we be on there. We don't always agree. Right, like again, me and the rest of my team family. You know, I'm 1/4 of the Prophet Society. You know, and the thing that I think makes us so different is that we don't always agree on setups, right? There's times where we disagree on setups. And in fact, recently there has been a lot of disagreements on setups, you know, but the education that comes from those disagreements is next level, right? Like the conversations and the arguments proving our points, this and that, is next level, right? And that's really, really game changer, like absolutely game changer. Why? Because now you guys are able to see the market from different perspectives and come out with an idea that works best for you. All right, that's the best thing about it. All right, it's like a debate show, and I love it. I love it because that makes me have to be on my P's and Q's. Iron sharpens iron at the end of the day. All right, iron sharpens iron at the end of the day. All right, but family, I appreciate y'all. It's gonna be more of a short stream, like I said. I just want to come on here, you know, chop it up with y'all. You know, look at the data, give you guys my thoughts and opinions. And we will be back on Sunday on the Prophet Society channel. Type in Prophet Society on YouTube, you guys will find it. And I look forward to seeing you guys there and, you know, get ready for the debates because you guys know damn well I'm going to be talking my ish on Sunday. All right. In fact, I'm about to be talking my ish in the Discord. So if you guys are now a part of the Discord, definitely go ahead and get a part of the Discord family because I will be in there also answering any comments, questions, or concerns that you guys might have. I'll go ahead and send a link for you guys right here one time. All right, and yeah, I'll see you guys in the Discord overall, family. But I love you guys. I appreciate y'all. And I'll be talking to you guys all a little bit later. Let's get it. Have a great rest of y'all day, y'all.